Alright guys, so I just want to do a quick explanation on it's what I shared on my Facebook on the day of August 26th, right here 3:30 a.m. in the morning. And um, I did also share it when it played out also, I think so. Let's look for it because I know I did posted it. Alright, so this is it right here. And I also shared it on my group, and this is where it got triggered right there. And yeah, I think I took the trade also, but then I left the market because range break is too slow. Now everything about range break, like everything I've learned about smart money concepts, it works out everywhere. It works out everywhere. Now this is range break currently, right now, starting from our POI since the day of August 30th, and now down to September 8th. We trade backwards to a fair value gap before we see ourselves going on right here. Now I know that one thing about range break is when you are on the lower time frame, you cannot actually find entries, stuff like that. Like it's hard due to the fact that the candlesticks looks like something that we don't understand. Like it's not the candlestick that we know of, that we learned when we got into trading. So also, if you even go down to your 15 minutes, 5 minutes, you actually see the reason why it was called a range break is because of a spike, like the boom and crash, then a range for Y after a range, before it spikes, spike, range, spike, range, spike. So trying to analyze this market on lower time frame is kind of hard and difficult to do because of the candlesticks are not what we know. So I always tell those on the mentorship or people that have asked me questions about boom and crash that I don't pay attention to lower time frame. I always go to higher time frame so that the candlestick will look like something that I know of, the candlestick that we all know. So right here, this is the range break on the daily time frame. The setup was seen on a daily time frame, and if you go to your monthly time frame, you know we always start analysis from the monthly time frame. If you look closely, you can actually see the market was trading in a trend line since when it was introduced on the Rive. You see the rally, the high highs, high lows, till it gets the peak level right here, and we see that positive crash like here, right there, like Luna. It just did a crash right here, and now we see this range right here. Okay, so that right there is a daily range right here. All right, we have the algorithm daily range right there. So paying attention to what occurred right here, we have this candlestick right here. You can actually see that the wick traded higher. All right, so we're taking off our drawings, our markings, we're taking them off. Delete, 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 delete. All right, now if you pay attention to what the algorithm did here, you can actually see that what it hunted was a previous 3 months high. Where is our previous 3 months high? Right here. That's the highest high in our previous 3 months. So if you count 1, 2, 3, this high is our previous 3 months. Now if you also pay attention to, like if you watch the last video uploaded on structural break and confirmation, you actually know when something did a break and when it did a hunt. This is actually identified on your monthly time frame. Alright, so even apart from taking out buy stops resting on previous 3 months high, it's still the same thing as 8 hunting double top. So we have Basa liquidity pool resting on this high. Remember, if you've watched the last video, you always see me talk about whenever there is areas of Basa liquidity pool, areas of 3 top, double top, there is always a hunt on that area. The reason why that hunt always occurs at area of double top is because there is liquidity pool resting on that high. We have a pool of liquidity resting on that high areas of stop loss. So he needs to go and hunt those stops and then go in the direction of the retail traders. As easy as that it is. So seeing this hunt right there, we have number one confluence daily range right here. The monthly daily range, you can see the candles right there. Second confluence is hunted previous three most high, like the teachers have taught on algorithm daily range. And then third confluence, to add to say that you believe your setup, is also we have a hunt on the top areas of Basel liquidity pool. So you have three confluence right here. That is for the monthly time frame. So now you are going down to lower time frames to see setup that you can actually take for a sell entry. Going down to the weekly time frame. Right here, you actually see it on the weekly time frame. Now, if I had to get to market structure, this right here is a high. This right here is a low. Now, price traded higher gave us a high, but this is not a high. This is now created liquidity, so we are not having structures anymore. We are now having a ranging market. And the ranging market, that leads to a daily range, all right? That led to a daily range. So now with that idea, what are you trying to identify is this high right here, and also this low right here. So you are in a range high and low. You're dealing inside that range, highs and lows. That is the major high and low. And then identifying that you hunted three most high, this is the three most low that will likely be targeting for price to go to. Now this other block, we're not going to see it as valid because it did not break structure. All right, we have a swing low and it failed to give us a high. Now we are going downwards. So with that all said and done, we are going to identify here as hunt on previous 3 months. So we have hunt on previous 3 months high. All right, so that is what we hunted, and that is our confluence, number one confluence, the major confluence that we have. So I was now on the daily time frame looking for entries. All right, zoom right there, and then extra confluence, we still hunted another buy stop on the daily time frame. So we hunted this buy stop, and I can actually say that it went to a fair value, a imbalance right there. So it's a confluence also. Now we traded lower. This is a swing high. This is a swing low. This right here is a failed high. So since it is a failed high, then an area of order block or demand we now hold for long. That is what we are having right here, right? So we have a failed high right here, a failed high. We put on our label right there, identifying that as a failed high, and then we say we are also having EOF, which is now has our expectation of order flow. So I'm expecting price not to go above this high right there. In other words, in confluence, a hunt on this high right there, still hunting liquidity. So price is purging every retail traders, every stops right there. I will not mention retail traders, it's hunting stops, right? That's what the program is all about. So now we are done with that. Now, price traded into this order block. Now this order block didn't hold for two reasons. Number one reason, we have sell stop below it. Alright, we have a sell stop. There's a stop below this week, and it now has liquidity. And the major one is that it did not break a high. The third one, it is at a premium pricing. Premium means that it's very high. So buying at a high is risky. You actually sell from a high, like the word go. So also another confluence is from what we saw the higher time frame hunt on buy stops. Alright, so now price did a reaction on the demand, then violates the demand. Now this right here is now what I am labeling as my change of character right here, because this is a swing low that traded into the demand zone. So I say that's a change of character. Remember, I said that we are using two structural break to confirm a shift of trend. Okay, and that is the change of character, and then the break of market structure, and that is what we have here. You can see the candlestick trading positively, breaking the low and closing far away from it before this candlestick again formed. So we're having a change of character, and then we are now having a break of market structure, the two confluence. Now the third one is for to validate your entry, to give you the courage. This helps in psychology, is you're looking out for imbalance. Now, sorry, all right, you saw your supply first, and that is the order block that were responsible to violate the opposite side of the other block, and that's what we have right here, a order block, also known as an area of supply, which is the last candle that was formed before imbalance and is responsible to violate the opposing order block, which is a bullish order block, a demand, which was violated right here. Now the third confluence is after you're seeing an area of supply. The only thing that will make you validate that your supply is for you to see an imbalance, and that's what we have right here. We are having imbalance after our order block was formed. So it's telling you that there is a pump in that market that were responsible for the price to impulsively trade lower, breaking structure and violating a demand. So what is the response for that? That means there was an order that was created, and that order that was created before the impulsive pump in the market that created an imbalance. Now, since you understand something about the algorithm and how it operates, something about the market and price derivative, you should know that the algorithm tends to do what? Clear imbalances to balance supply with demand, because it goes with the law of supply and demand. The algorithm is programmed to do what? Create imbalances and go back to balance that price. Now, when it has to balance that price, it's either it balances it and goes to intended direction, or after it balances the gap, it has to go to another opposite side of each direction whenever it wants to go, and that is to be drawn to liquidity. Now, it goes in line most of the time is that you should always pay attention to your structure. If you can't actually understand the structure or you're confused about your POIs, you should actually stay off the market. So, take these two things down. The algorithm programmed for balancing areas where we are having imbalance, inefficiency, and also drawn to liquidity. Areas where we're having stops, the buy stops, and the buy side liquidity pool. Understood? For example, price came to this imbalance right here, and you can see why balancing the sell side, it quickly balanced the buy side, right? So it was balancing the two sides. So after that, it found its way up to be drawn to liquidity. All right. So we have seen our supply zone. We have seen the imbalance. We saw the two structural break that gave us a strong confirmation that this pump right here is a strong one. So change of character, break of market structure. I love seeing two structural break. That gives me a strong confirmation to enter at a certain area. So this is the area I marked for entry. All right, and all right. So the first one was change of character, break of market structure, find your supply, make sure there's imbalance. The third one is to find liquidity. Liquidity should be at your area where you're having interest. So that means that the algorithm wants to take liquidity, balance the gap, and mitigate the area of supply that were responsible to create this impulse right here. And you actually see that we took our liquidity, balance this gap. You can actually see the wicks balance itself. Then it trades back, it trades into the supply, balanced it, and we saw that rejection, right? Now you actually see that after that rejection, and it went to balance a gap right here, right? and violates it. Now, why it did that? It also, the opposite side of the fair value gap, the bar side, it also created a sell side imbalance. Now, the reason it has to do that is for it to come back later on to balance the gap. Either it completely closed it or at 50%. So after that, it goes to the intended direction, which is a sell. Hope you guys understand that. So when price wants to balance a gap, right, and it wants to violate that area, most of the time it leaves imbalance at the other side also, so it comes back to balance the both, right? So it's just you having an understanding in the market. So for time frame, this is supply. You can actually see how clean it is, right? And you have liquidity for it to hunt. Let's have the supply and then rally downwards. So this market is very slow. You can actually see how many days it took right there. So I cannot hold. We have the 8 hour. We have the 6 hour time frame right here. We have the 4 hour time frame. We have the 1 hour time frame. Now, what you actually want to mitigate is that of the 1 hour time frame. We have that other block right there on the 1 hour time frame, and that is where you went for sniper entry right there. A very, very clean setup, and then we see drop. Okay, so I hope this is the first time I actually analyze range break and had an entry. I shared it on Facebook, I shared it on the mentorship also, on the group members, and now I have to show you guys that I like everything. That is the algorithm that all this is the same algorithm. What we have been teaching you is the same. Smart money concept, retail concept, everything is programmed. There is no other thing. There is no any other hidden secret. Again, I will know that this market operates with. Maybe there are other secrets behind, in which I think with my time of study and research, I will be able to discover that and learn it, and also be willing to share the knowledge with you guys. Alright, because I know there are other things that happens right here, like why the candlestick was behaving like this, reason why you did this and that, blah blah blah, stuff like that. Like, I would love to know that. Alright, but you should know that the market, this is markets, right? So if you're a businessman, you know how the market operates. If you went to school to study economics, you know what you always solve right there is school. Supply and demand balance, the imbalance equation of demand and supply, it should be equal. And you know about all the blocks, stuff like that, your trading career. So yeah, so I just want to do a brief video on range break, and take care of yourself guys, and be safe.